What is my perfect trade? I get the tip at 3:58. Market closes in 2. Do I buy Apple? Nope. I buy a defense contractor. More subtle. Next day, war breaks out. Stock triples. The ethics committee calls. How did you know? I say, gut feeling. They respect that. As I'm selling, a lobbyist walks in. He says, that was my intel. I say, was it? We spend the weekend at Camp David. No one's there. It's romantic. Monday, market's back in session. I tell him to meet me in the Caymans, but I go to Switzerland. I don't trust him. Besides, tax laws are better. 30 years later, I get a letter. I have a son. He runs the SEC. This is where the story gets interesting. I tell the lobbyist to meet me at the Lincoln Memorial, midnight. Turns out he's been following my trades for years, through autopilot. It lets you invest like a politician, without marrying one. He says he needs one more tip. I don't care. I don't show up. Flew to Singapore. That's where I set up the shell company.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks climbed on Thursday as oil prices surged amid Russia sanctions and as Wall Street passed through a fresh batch of quarterly earnings after Tesla and IBM fell short. Now, the energy space here was very, very bullish, very green. Good to see this sector get a bit of relief. We'll talk about it a little bit later on. Industrials were also very, very green today. And actually, it was just a green day through and through. We saw software, semiconductors, both the equipment hardware manufacturers and just the pure play semis like NVIDIA, AVGO, AMD, MU, really green today. Infrastructure, apart from Microsoft, super, super green. Apple gained, Amazon gained. Tesla was up 1.3% after dropping its earnings, right? Google up 1%. Meta kind of flat here today. And then the defensive sectors taking it on the chin. You can see some of these healthcare names, not super, super flashy today. The telecom services names, which are a defensive sector. Consumer defensives as a whole were mostly red, kind of mixed. All in all, just a very, very solid day through and through in the market. The S&P 500 up 0.7%, as you can see right there. High beta completely outperforming the Russell, up 1.47%. Energy, the best performer after the US saying it's going to sanction Russia's 2 largest oil companies, essentially denting the profits in Putin's oil and war machine. We saw materials gain on the back of that as well. And then tech after IBM and Tesla's earnings was also up 1.32%. But the market also just like really rebounding off yesterday's pretty steep losses. We saw financials, discretionary utilities, and healthcare down as well. And you simply can't hold this market down for a while. But it wasn't all guns and roses. We saw real estate, communication services, and staples all fall. Although comm services and real estate were actually just flat on the day, down 0.1 and 0.7% inconsequential. Really, staples down half a percentage point. Today really was a day for growth. You could see large cap growth, mid cap growth, small cap growth, all very, very green, as well as small caps. You can see right here, these were the best performing. So value call growth in smalls, growth in mids and large were good, but we did see gains in the other factor and size segments. It wasn't all just a one-way party, but definitely outperformance in the growth component on the market. And this comes off some news. China came out today and said that trade talks with the US are set for Friday. So US officials are going to be speaking in Malaysia, and then President Trump and President Xi's meeting is scheduled for next Thursday. So we are starting to see dialogue between the US and China, and the market really, really likes this. At the same time, JP Morgan and BofA, Bank of America, their analysts came out and said the Fed is poised to stop balance sheet runoff at next week's FOMC, reversing the liquidity drain from its $6.6 trillion balance sheet. The Federal Reserve Chair Jerome Powell recently indicated that reserves had reached levels necessitating adjustment to the program launched in 2022 to combat inflation. And markets really, really like this. This is essentially like excess liquidity that's drained from the market will no longer be drained. And from QT to no longer QT, we go into potentially a QE era if things get really, really bad. So that is liquidity in the system, and risk assets do really, really well on the back of that. At the same time, the Trump administration came out and said they're in talks to take equity stakes in quantum computing firms. This is very, very interesting stuff. I'm not sure how this is going to pan out, but these names, these quantum computing names, were up in a very big way, all excess of 20%. But looking at some other market movers, Tesla, after its earnings, it was here in the doldrums, to kick the day off, but rallying up 1.78% today. And that's because Tesla beat revenue, missed earnings, however, ever so slightly, but provided very upbeat commentary on its optimism, on its Optimus robots, which Elon said will be announced in Q1 2026. When we look at IBM, they also reported their earnings, with adjusted earnings and revenues beating the analyst expectation. But the reason why the stock was down is because software revenue growth disappointed. IBM also then came out and said it. This is why the stock sort of like ripped off these lows right here. Its first error-corrected quantum computer is coming by 2028, and real customers like HSBC and Vanguard are already getting performance gains from their system. So the quantum computing space certainly heating up right now. And then we saw crude oil was up 5.5% today after the US placed sanctions on Russia's giant producers, piling pressure on President Putin to end the war in Ukraine. Crude oil rose as a result, and this is probably going to be a boon for crude over the next couple of weeks while we get this sorted. We'll see if this dents Putin's resolve, but all in all, the US definitely wants to see the war end there in Ukraine. And then for everything we saw today, guys, there was 4,000 advances, 2,200 decliners. We saw net inflows in the Nasdaq 100, outflows in the New York Stock Exchange, with the S&P 500 up 0.7% today. And we recaptured the 20-day moving average. We lost it here over the last couple of weeks. We regained it today. We still have work to get to the 50, but the shorter term average is looking really, really healthy. The longer term average is looking really, really healthy. Medium term averages are a little mixed, but this is telling us longer term, you want to stay constructively bullish on this market. Look at what happened if you got bearish yesterday or the day before yesterday. Then you have a day like today and you miss out a solid day in the S&P 500, and especially in tech and for commodity producers. But let's hop on the charts. And I will go ahead and say it again. This is why you actually want to stay invested in the market over the very long term, because you're going to get days like these, right? We had very mixed price action over the last 5 days. If we actually just look at the last 5 days in the S&P 500, you can see that we pretty much just traded sideways. And then here today, we absolutely just ripped to the upside, nearing all-time highs for the S&P 500. And that is why you ultimately want to stay invested and ignore a lot of the volatility and the noise that comes in the market. There's always going to be things to sell stocks about. There's always going to be things to buy stocks about. But when the trend is bullish, guys, ultimately you want to stay bearish. And we're near all-time highs for the S&P 500, up 0.75% today. The Nasdaq just shy of 1%, not quite an all-time high, but at a closing all-time high. So you can see here, this wick was higher than where we are right now, but the close is actually higher, and that will be a closing all-time high for the Nasdaq 100. The Russell 2000 up 1.48%, pretty much at all-time highs here at the weekly chart. Another closing all-time high, but again, not a wick high. The equal weighted S&P 500 pretty much at its highs, and that is the story of this market. We have this entire market pretty much at or near its highs, a couple of percentage points away from its all-time highs. If we take a measured move, 3.8% away here for the mid-cap index. When you look at the SP 600, very similar situation. And today, growth outperformed value, but both value and growth gained. Crypto was very, very bullish. Definitely a day for higher beta. Bitcoin up 2.62%, Ethereum up 1.35%, and Bitcoin holding this $110,000 level. Volatility ticked down. I was actually thinking of potentially buying a VIX call just to hedge into some Trump volatility this year. They were actually looking very cheap. $20 VIX calls are like $1.70. It's actually really cheap. We saw yields move higher year today, probably on the news of that QT program potentially ending. That's more liquidity in the system, potentially inflationary, and the market's reacting accordingly. The dollar was flat, treasuries were down, and that's because yields were up. And then when you look at it, gold was up 0.82%, silver up 1.22%. And again, with regards to QE coming to front of mind, or the ending of QT, we're going to see these commodity plays or these debasement hedges higher. Also, the commodity space was positive today on the back of the Trump news, with crude up 5.47%. But let's talk about the S&P 500. And we already did a little bit, pretty much saying that, look, we're near all-time highs. The weekly chart looks really, really bullish. I'm still waiting for a pullback to this area right here, but I'm not sure if we're going to get that in Q4. We might just continually get these extremely shallow dips and just do this with the S&P 500 for the rest of 2025, and we inch our way to the 7,000 mark. That is Tom Lee's price target. My price target for this year is about 6,600, but I call that at the start of the year when the S&P 500 in 2025 we're sort of around here, at the 5,700 area. Look at where we are right now. I was looking for about a 12% gain in the S&P 500. And if we actually just go on a year-to-date percentage return basis, we're up 14% year-to-date. Insane. And that includes pretty much like a stock market crash, or what we would call a bear market, a peak to trough gain, loss of 20% or more in the S&P 500. It just goes to show why you always want to hold assets. And with the amount of liquidity in the system, stocks will always recover to all-time highs. And there's going to be more liquidity in the system, especially with the ending of QT, at least next week. At least that's what JP Morgan and Bank of America are predicting. The Nasdaq 100, very similar situation. We're at these all-time highs, guys. The only thing I could say here is buy these dips. And if we do get to these like key levels here, it's 22,000 for the Nasdaq 100. Buy those dips because we probably go higher into 2026. We're looking at rate cuts, strong earnings, margins expanding. The AI capex will continue. I don't know what derails this market right now. All dips will be very short-term in nature and be bought exactly like they were here in April. Same with the Russell 2000, a very similar situation, the equal-weighted S&P 500. I think the most interesting thing right now is probably the crypto space, because Bitcoin has done virtually nothing, since like May 2025, pretty much nothing. And whenever we had consolidation periods where we just go sideways for Bitcoin, we make our next move, right? You can see it pretty much go sideways for a while, Bitcoin goes down, go sideways for a while, Bitcoin goes up. Very similar situation right here for Bitcoin. We just go sideways for a while and then we rip to the upside. So all in all, Bitcoin is getting ready to make its big next move. I still think we're going to go higher. I am bullish. As long as we stay above the 100,000 mark, I am constructively bullish on Bitcoin. Ethereum up 1.22% here today, holding this trend line. This is ultimately what we want. The base case here is we're probably going to go to the upside right here and then make our next move up or down here for Ethereum. I am constructively bullish. And yeah, I wouldn't even be crazy to say 5,500, 6,000 targets before the end of the year. Now, yesterday I said to a lot of you guys, you want to start adding and deploying capital into some of these AI infrastructure names. One of them I really liked was APLD. The stock is up 9.18% today. And I do think we're probably going to go ahead and hit those all-time highs. Another stock I've been talking about a lot lately is BMNR, Bitmine Immersion Technologies. Tom Nee is the chairman of this company, up 1.94% today. EOSE, another very solid name. This was actually down 2.95% today, but that's because it bucked the trend for all of these infrastructure names. They've been crashing significantly. They're about 40% to 30% off their highs. EOSE is only about 20% off their highs, and that's because it had a lot of news circulate. That's why it was only down 3.02% here today. But when we look at names like NVIDIA, right? NVIDIA was up 1.36% today, really gauging what it's going to do ahead of its earnings in a couple of weeks. We also have some of the big earnings names. So I think these AI names is where you really want to probably start to lean long, especially as we get this earnings season behind us and we go into a rally. I also think some of the treasury plays are a great place to be right now. Even though we did see crude spike and we did see gold sort of move higher, I still think that there's a lot more downside for gold. I think all rallies are going to be sold into gold. We're probably going to look at price action very similar to this, get to this level here, and then we'll rip to the upside for gold. But I do think we're going to see some tangible downside here for gold as we rotate into crypto, into Ethereum, into Bitcoin, and out of what has been an absolute crazy rally. I mean, the futures chart for gold just looks absolutely nutty. Just look at this, like one-way traffic. We are pulling back now, but that is an absolutely crazy momentum ride we've seen in gold here. And you can see we sort of just did a lot of basing here for a couple of months and then everything all at once. And Bitcoin is going to do very, very similar thing. Bitcoin actually lags gold by about 100 days. So gold moves, then Bitcoin moves. The thing is, Bitcoin's beta is at 2 to 3 times gold. So expect significantly more returns coming from the Bitcoin side over the next couple of weeks. But ultimately, guys, you know the go. Buy the dips, leaning to AI infrastructure, leaning to tech. This theme is going to go on into the end of this year through 2026.
Guys, and diving into sentiment, this is the AAI sentiment survey. And despite the price action we've seen over the last week, which has been somewhat bearish, actually quite a lot bearish, we actually saw bullish sentiment tick up, bearish sentiment tick down. So despite markets having quite a bit of volatility, the market overall, or at least, American investors are a bit more positive on the market over the next 6 months. Maybe this is a bit of a lagging indicator. I think if you were to do this survey right now, we'd probably see more of bullish sentiment skewed versus bullish sentiment. That being said, the data is the data. And despite equities experiencing a lot of volatility, sentiment tick up often that's indicative of the market moving higher and often an interim bottom. When we look at earnings, guys, there's one thing we need to be looking at, and that is the beat rate. Now, so far this earnings season, we're looking at a 6.2% surprise, a massive surprise, with 83% of companies beating the earnings expectation, and we're seeing 9.8% earnings growth. Coming into earnings season, the market was actually looking for about 7.3%. So we are smashing the analyst expectation with an 83% beat rate. And when you actually look at Q3 consensus forecast, we are actually seeing a change here to the upside. So we're beating as earnings continue to move higher. Very, very solid stuff. But where does that leave us with valuation? Right now in the S&P 500, things are looking frothy. Along with the Nasdaq 100, the Russell 2000 is trading at the top end of its interquartile range. The equal weight and mid caps look relatively attractive, if you ask me, at the high to mid-teens multiple. So if you are looking for value, look to these indices right here. But when we look at the macro, guys, I want to talk about the consumer. We had quite a number of big banks report last week, and this is some of their data. I think the best data we have here is US services billed from American Express, and it kind of shows us Gen Z, millennials, Gen X, baby boomers, plus their total spending, right, and their year-over-year growth and the percentage that they make up. So you can obviously see here that, guys, this is crazy. Millennials make up 30% of total spending, grew 12%. That's bigger than baby boomers, right? Baby boomers are 20%, are 28% of total spending and only grew 4% on a year-over-year basis. Look at Gen Z, massive growth, but a small piece of the pie, and this is expected to grow. So ultimately, guys, the people with money continue to spend. This is American Express, so these are affluent individuals, but the people with money continue to spend, and until this turns, I think the economy, stocks, and the macro should hold up. At the same time, when you look at Bank of America, which again, it's more indicative of the broader economy, net charge-offs actually moving down, right? Net charge-offs is the amount of debt a lender writes off as uncollectible minus any amounts of recovered from those previously charged off debts. Moving to the downside, this is what you want to see. So we're seeing the affluent customer continue to spend. The average customer charge-offs are falling. The consumer looks very healthy, if you ask me. Now, looking at earnings for the rest of the week, guys, we have Procter & Gamble. That's about the biggest name that's reporting tomorrow here on Friday. And then we have some of the key data. CPI, we get those numbers, and then we get the PMIs right here, the manufacturing data, Michigan consumer sentiment, as well as home sales. So a very, very big day of data tomorrow, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, comment for the algorithm. Cheers.